Right, thank you guys so much for joining another video for today. I am currently in a trade right now, and I will show you guys why. So here I'm gonna stay on the 4-hour time frame just so I can show you guys why I even took this trade in the first place. Well, first things first is notice how we closed. As a little bit of a better picture here. So notice how we closed here on this daily time frame. So based on that daily time frame, what can you anticipate prices to do next, right? Can you anticipate prices to take out let me change the color of this. Can you anticipate prices to take out the green line or this red line? So based on this candle here, this very next daily candle, can you anticipate the next daily candle to take out this green high or this red line? And keep in mind that we're opening right here. We're opening at that blue line right there. Based on how we're going to open, I can anticipate for prices to take out this green line, right? It's pretty clear, it's pretty simple, but that's just the way I view prices, and that's the way I see, that's just the way I see bias, right? So with that in mind, I already have, some sort of, objective bias. And I even stated in the weekly market outlook that I wanted to see prices take out previous week's high here too. So let's apply the same concept, the same power of 3 concept, but instead of it being on the daily time frame, I'm going to apply it to the weekly time frame. So the reason these candles right here to the right of mine, so all of these other candles right here, they're all 4-hour candles, but these right here are daily, weekly, and monthly, and this is just an indicator that I have. But so based on this weekly candle, right, that black line is, this is the weekly, weekly, I'm going to say power of 3. So that is the weekly power of 3. Based on how we close on that candle, right? And we're going to open up around this blue line. Is the blue line closer to the green line or the red line? I'm just gonna break it down as simple as possible. Prices is relatively near to the green line, right? And you can anticipate for the next weekly candle to take out the green line before we take out the red line. That's literally all I'm doing, is that that gives me bias. It doesn't give me a trade setup, but that does give me an objective that gives me a bias. So notice how both on the daily time frame and the weekly time frame we have the same objective, or we have the same order flow. We want to seek higher prices. So with that in mind, I'm going into today on Monday, and I'm going into it with the idea that we're going to take out previous day high, being Friday's high of day, and I want to see us take out previous week's high sometime this week, or maybe, like I said, because of how I'm already bullish for the Monday session because of how we closed on Friday, because of how we closed on Friday, and that it's giving me a bullish bias coming into on Monday today. We could end up taking out previous week's high today as well. And it's always best to take a look at the economic news calendar. So what can cause prices to move, right? What's going to bring in the volatility for prices to move in one direction? Well, it's going to be the red folder news. It's going to be, an injection of volatility. The red folder news will bring an injection of volatility. And we do have one on Monday here. So it is reasonable for us to take out previous week's high this week. But so like I said, now I'm going to, I kind of did this breakdown a little bit. I broke this trade down a little bit backwards, but because we're bullish on the weekly time frame, I have a bullish order flow, and this daily model is also bullish. So I'm aligning different time frames with one another. So now I'm gonna go into the lower time frames because the daily high. So this daily high right here, let's make that green. Notice how this green line is completely different than this. Look at where, so the daily high is lower than the weekly high, but like I said, the weekly candle and the daily candle are both suggesting higher prices. So this could be known as an expansion model. So I'm going to take a model here based on the weekly order flow, but I'm going to take it on the daily model. So now I'm going to go to a time frame relative to the daily time frame to find an entry pattern. So this is very important here because I'm trading on the daily model, or I'm taking my trade based off of the daily model in accordance to the weekly order flow. I'm not going into the 1 minute chart to find an entry pattern. I'm not going to go into the 2 minute chart for an entry pattern. I'm going to go onto maybe like the hourly, the 4 hour, the 6 hour, one of those time frame that's relative and proportionate to the daily time frame. So here, this is the hourly chart here. And notice how there is displacement. There is a 6 hour fair value gap, an 8 hour fair value gap, even this small tiny 10 hour fair value gap, and a 4 hour fair value gap. So there's displacement on the lower time frames to suggest and support the idea for higher prices, right? So this is previous day high, this is previous week's high. I take my entry at this 6 hour fair value gap, and I'm targeting previous day high. So after we take out previous day high, I'm gonna move my stops to break even. And notice where my stop loss is here. My stop loss, I placed it at the 4 hour fair value gaps, basically the low end of it, because I'm not really anticipating a complete rebalance of the 4 hour fair value gap. And after we take out previous day high, I move my stops to break even, and notice where my first target is. So it's a 1 for 1. I'm shooting for a 1 for 1 here, and I ended up, this is the current trade right now. I took off partials once I noticed that there was SMT between ES and NQ. So ES, yeah, we have yet to take out previous day high here on ES, but previous day high on ES, keep in mind, is previous week's high as well. So let me just show you guys here. So ES is a little bit of a different scenario here. So ES is, so if we end up, okay, so we just took out previous week's high on ES. So now it is reasonable for NQ to reverse here, or because we took out previous month's high on ES and previous week's high. We look at where we're at on NQ. We have yet to take out previous week's high and previous month's high. And previous month's high is all the way up here. I mean, we could end up taking it, but like I said, it's not in my weekly objective. And I'll show you guys some of the receipts that I had, or actually you can just watch my weekly market outlook, where I specifically said that we aren't we're going to take out previous week's high and previous month's high here on ES, and that is exactly what we did. So because we took out previous week's high, because we took out previous week's high and previous month's high on ES, and we have yet to take out previous month's high on NQ, I wouldn't be too surprised if there's going to be a top here. But like I said, anything could happen, so I'm not really going to force anything. But so I believe I just completed, I actually just got stopped, or not stopped out, but I just completed the objective here. We've taken out previous week's high, previous day high, and I mean, it's a model that occurs on every single time frame. Like I said, previous week's high was the objective just because of how we close on the weekly time frame. That's just how I view things. It might seem a little bit, easy and simple, but that's just how I do things. And yeah, I mean, we ended up completing the objective. We've yet to take out previous day high. That's key here, is because the reason why I'm able to take this is because we've yet to take out previous day high, and previous day high is in alignment with the weekly order flow. So I'm just gonna keep going over that, iterating over that, and yeah. So like I said, I am buying below the open here. So I bought below the weekly open and the monthly open, with the idea that we're going to take out previous week's high. So if we're bullish for the weekly time frame, you want to be a buyer below the open, and vice versa. If you're bearish on the weekly time frame, you want to be a seller above the open, and this goes for every single time frame too. Because what did ICTs teach? Prices is fractal. So now, because we just completed a weekly objective, I would switch over to the intraday models now. So I'm gonna trade base. I would get my bias, my higher time frame bias, like the daily bias or weekly bias or monthly bias. I'm gonna now stick to the daily time frame for my bias, and I wanna see how we close on the daily time frame for a daily bias. But for right now, for this present moment, I do want to see how we close here on this 4-hour candle and this 8-hour candle for my morning objective, for my morning bias. But we still have 25 minutes, so I'm not going to say anything too soon, because who knows, maybe we could end up, like I said, we could create that SMT, because NQ is nowhere near previous month's high. We could end up creating that SMT and having a reversal. Who knows? For right now, I'm just going to stick to the sidelines and just watch patiently and wait until a model presents itself. So there is that. I mean, it's a pretty simple breakdown of what happened today. And I took this during the Sunday opening, and I believe, I'm just not even gonna touch trade of it, because I don't want to show my credentials or anything like that. But yeah, I believe I took a because this was presented on the literally Sunday's opening. I wasn't able to quite exactly buy like here. I believe I ended up buying like somewhere down here, and you guys can see that on my paper trading account if that shows up. But yeah, I was kind of afraid that, or not afraid, but I was like, oh man, I might not be able to take this entry, because my platform doesn't allow me to, I guess, be a part of any trade at Sunday's opening. So I ended up buying somewhere like around here. But it's, like I said, it's still the same idea, same stop loss in place, same targets, everything's the same. But yeah, if you guys apply that way of thinking with every single time frame, like I said, apply that bias, that way of thinking with the power of 3 on the 4-hour time frame. So this is something that I believe that ICT really it meant by, like, if you can view 4-hour candles as daily candles, a new world's gonna present itself. So back then, I would really stick to only one time frame, or not one time frame, but like a very strict, lower time frames, only 5-minute charts, 15, even 1 minute. But now, that I'm able to see the power of 3, I can apply that concept of open, high, low, close. Are we going to take out this candle's high or this candle's low with the next candle? With me applying that to every single time frame, I open a ton of doors. So I opened the door for a 15-minute model. I opened the door for an hourly model. I opened the door for a 4-hour model. All of these things, it occurs every single day, but the thing that's gonna set you apart from a, successful and I wouldn't say not successful, but is being able to follow your rules. So because there's so many setups that provide itself during a day, you need to be able to create, and follow a set of rules that you've created for yourself to be able to find that consistency with models. And I'm still trying to figure that part out. It's kind of it's a work in progress, but I know that as long as I keep trying to find that critique, and as long as I follow the rules that I've set for myself, I'm good. I would be good. But yeah, for right now, like I said, I would wait 20 minutes. I don't want to be touching the markets here for this first 30 minutes. Yeah, because like I said, because we already completed the weekly objective, I would switch to intraday models. I don't have a bias anymore at this point. You could end up using standard deviations to see how far we could go higher, how far we could go. But here, the best decision for me is to just wait, see how we close on the 4-hour candle and the 8-hour candle for an objective. But that doesn't even if we close bullishly, that doesn't give me the incentive. That's not going to give me the okay button to take a trade. That just gives me a bias. But if there is no model that presents itself, I'm not going to take anything. There's just no point. Even if the direction in the markets is clear, you can't base a trade because of certainty. The market, you cannot be certain with the markets. You can only anticipate where prices could go, and if you have a rule sets that you can follow that is favorable for your style. But yeah, that's gonna be it for right now. There's still about 20 minutes left. I do want to go over some of the pros and cons with you guys, because that is something that I want to just continue doing. So I even wrote it down on my journal here too. Previous day high, draw up liquidity. Very, very good. That I'm like very proud that I'm able to execute on my model. To be honest, it's not even the outcome that makes me excited, or not even, that makes me excited. But it's that feeling of hey dude, you followed your rules, you did freaking good. But let's go into the pros and cons here. So last week on November 25th and November 29th, I was able to maintain composure and discipline when it came to following the rules that I've created for myself. So some rules is requiring a higher time frame objective, right? So 4 reasons why prices move. I want to, if you guys are actively listening, you should write this down. 4 reasons why prices moves is to rebalance inefficiencies, is to retrace back into discount and premium, is to generate liquidity. So generating liquidity is essentially this right here. This is generating liquidity. You don't want to be a part of the markets when prices does this. We're creating, highs, lows, highs, lows, highs, lows. It's really back and forth as compared to this move. So notice how there's this straight up move here. Just a straight freaking beam. That is something that you want to be a part of. It's just a straight up move. You don't want to be in back and forth action. So that's generating liquidity. The 4th thing is taking liquidity. We're generating liquidity for prices to end up. So all of these lows that I see right here, those are just easy targets. Very, very easy. I'm sure someone probably sees this as a bull flag, or not a bull flag, I forgot what. This could be, what is this called? Diagonal line support. I don't know, but I'm sure whoever sees this as like, you know, oh, prices is gonna come down to this green line, we're gonna respect it, or we might come down a little bit here and end up respecting it. That's not really what prices does. It doesn't respect imaginary lines, but yeah, you can imagine that prices, all of those green lines that I just showed you guys, all of those horizontal lines, that's liquidity that prices is going to seek. The previous week's high is the liquidity that prices seek. That's a form of liquidity. Anything that's a swing high or swing low is a liquidity. So, like I stated before, so that's the 4 reasons why prices moves, right? I'm gonna go over again. Generate liquidity, take liquidity, rebalance inefficiencies, and retrace back into discounted premium. So this just goes all the way back to what my higher time frame objective is. So the trade that I just went over with you guys, that would be known as an expansion model, or taking liquidity. We're taking previous week's high. And the reason why I call this an expansion model is because notice the model that I took the trade on. It's on the daily time frame, but and the reason why this is called an expansion model is because the higher time frame relative to the model that I'm taking it on, so the daily time frame, right? A higher time frame that's relative to the daily time frame is the weekly time frame. So notice how the weekly high is different than the daily high, but both the daily time frame and the weekly time frame are suggesting higher prices. That means that I can take my model on the daily time frame, have the daily high as a, you know, low hanging fruit, and because the weekly time frame is already suggesting higher prices, I could use that as another target point, you know? So that's just something that you do want to just keep in mind. Yeah, and that's, like I said, that's why it's called an expansion model. I'm taking my model on the daily time frame, but the weekly time frame is telling me that we could continue even higher after taking out the daily high. So yeah, and that's kind of it for my objective. But the other part to a model is, so the first part is knowing where prices wants to go. The second part is to even have an entry pattern to be a part of the move. And my entry pattern, the things that I use to enter a trade is fair value gaps. And fair value gaps are created whenever there's displacement. So if there's no displacement, my rule set states you cannot and you will not take a trade if there's no displacement. If there is a lack of fair value gaps, you're not going to take anything. Second thing here, second positive is understanding the fractality of the markets. So last week's trade, which I'm going to go over here in a bit, there was a back-to-back trade here last week. First one was a 2-hour objective. Second one was a 30-minute objective. That kind of shows you the fractality of the markets. And usually, if you guys are with me for a while now, you guys will have seen that I tend to take my models on the 15-minute time frame. It's kind of rare for me to take a model on the daily time frame or like anything that's higher than the 4-hour time frame, because I'm mainly an intraday trader. I'm not really a swing trader or anything like that, but just because, like I said, I understood the fractality of the markets and I saw an opportunity, I wanted to take it and it presented itself. So instead of taking it on the 15-minute time frame like usual, I took a model on the daily time frame with the idea in accordance with the weekly order flow. So understanding fractality of the markets. Third, accepting the fact that the markets will come to me when it decides to do so. So this basically goes back to the idea that you don't want to force anything onto the markets. So like I cannot force any models onto the markets. There's no way that you can force, oh, I want to see higher prices here. I want to see lower prices. The markets are not going to listen to what you think. It's going to do what it wants to do. You don't control it. The only thing that you can control is if you're going to take a trade or not. And that's the only thing that should be on your mind. And I feel like this applies with everything in life too. So just accept the fact that there are things that you can't be in control of. So only keep in mind the things that you are in control of. Fourth thing is having a time stop. So I'm gonna go over this whenever I go over some of the trades that I took, or the 2 trades that I took last week, because I can't really explain this without an example. Some of the, I guess, negatives or some of the things I could improve on is properly managing risk. Every single trade I take, I should be risking 809. I know this might seem like a large number because I want to be more aggressive during the eval stage. I do want to, I do want to kind of get it over with faster, just so I can start, on the actual, risk management itself. Improvements for next week. So, like I said, I do want to continue to practice patience and discipline and allowing the markets to come to me and not forcing an idea onto the markets. Every single trade that I take must have a higher time frame objective. So the higher time frame objective for this trade was the expansion model, and requiring displacement on the lower time frames too. There was displacement in the trade that I took today, or overnight. Third is to continue to pay attention to SMT. So like I said, because there was SMT between previous day high, between NQ and ES at previous day high, I took off some contracts. I was able to move my stops to break even, and yeah, just really paying close attention to SMT this week, and especially this week, because there is a large SMT between NQ and ES at previous month's high. And fourth but not least, just being able to risk manage properly. Currently, right now, I do want to, like I said, I do want to be risking 894. Seems like a large number, but there's reasons why. I mean, I basically kind of already covered my market analysis already, but on the dollar, I do want to see lower prices. So let's take a look at what we are doing on the dollar. So I do want to see us take out previous week's low here on the dollar. But it seems that we're not going to do that right now, which is completely fine. It gives me, it's just like an idea. But yeah, so NQES, I do want to see higher prices. We already completed the weekly objective here for this week on NQ and ES. The monthly objective for NQ and ES was previous month's high, but we have already taken out previous month's high on ES. And one thing that I do want to point out is the monthly objective here on NQ is previous month's high, but I would need to see displacement on the daily time frames or like the weekly time frame to really be convinced that we are going to continue higher. The reason I say this is, so even though previous month's high, like based on this monthly candle, right, I can anticipate for the swing high to be taken or the monthly high to be taken, right? But one thing that's kind of giving me okay, just be careful here, you don't want to be a part of anything, just yet, is the lack of displacement. So this entire move up right here, or yeah, this entire move up was a grind. It was a back and forth onslaught. It's just super choppy. But yeah, like you guys can see it here on the daily time frame too. It's just a lot of back and forth. So that's why I'm gonna like to sit on the sidelines for the monthly candlestick at least. But I have a bullish bias here, but I would just be a little bit careful here. But yeah, NQES, we already completed the weekly objective. And yeah, that's gonna basically cover all of the basically the pros and cons. The daily quote for today is something along the lines of, I would rather regret the risk that didn't work out than the chances that I didn't take at all. So there's going to be opportunities that present itself to you, but not all of those opportunities are guaranteed to be a hit or going to be a banger or whatever. So, but you're gonna miss every single shot that you don't take. So sometimes you're just gonna have to risk something for you to gain something. And yeah, you don't want to be not taking an opportunity and regretting about it later. You might as well take it. Have something to kind of fall back on, this, which is why there's risk management, right? Yeah, we're about to open up on this new 4-hour candle and 8-hour candle here in about 5 minutes or so. We're pretty bullish here, to be honest. I'm not gonna lie. 4-hour candle and 8-hour candle are both suggesting that we're going to take out the respective highs. Whether I'm going to be given an opportunity to take it or not is completely up to the markets. But yeah, as of right now, it appears that we're probably not going to be given an opportunity to take anything. But that's just going to give me my morning objective, right? I'm going to know where prices wants to go once we close here on the 4-hour candle and 8-hour candle. And yeah, let's cover the trades from last week. So freaking every time I stretch, I just so like I said, I took 2 back-to-back trades last week, and they were both on Wednesday. And like I said, the fractality of the markets, right? So we took out previous day low here and previous November 24th low here on NQ. I wasn't given an opportunity to be a part of anything here, so I just waited and waited and waited, and finally I got my opportunity. After we took out previous day low and November 24th low, we began to kind of like, well, we did displace. So there's like displacement here on the 15-minute time frame, and we're retracing back from this swing high to this swing low. There is a dealing range, a hourly dealing range, right? And within a dealing range, there's a halfway point. That halfway point dictates where the discount and premium separates. And why do prices move? If you guys can answer that question, 3, 2, 1. Prices moves to retrace back into premium or discount. In this case, we're retracing back into premium, right? So there's a reason for us to continue higher. Do you want to be a seller in premium, or do you want to be seller in discount? So technically what I'm asking you is, do you want to be selling low, or do you want to be selling high? The answer to that question is you want to be a seller at a high price. And the markets here isn't given an opportunity yet to sell high. So what prices wants to do here is actually push prices higher to maybe possibly continue lower. So on the 2-hour time frame, we created this bullish 2-hour candle closure, and we created this inefficiency, this 2-hour fair value gap. This fair value gap is a gap that could be rebalanced. So now that I have my higher time frame objective in mind for us to rebalance a 2-hour fair value gap, for us to retrace back into premium, I'm gonna take my models here on a lower time frame relative to the hourly time frame. So you know the trade that I went over this morning with you guys, how I took the trade on the daily time frame and the weekly time frame. What time frame, with the knowledge that I told you guys just earlier, what time frame would I now take my model on if I'm going to be basing it off of a 2-hour objective? Hopefully you guys are able to answer a lower time frame relative to the 2-hour time frame. So like the hourly, the 30-minute, the 15-minute. Hopefully you didn't answer the 4-hour entry model or something like that. Right? That's counterintuitive. You want to be going from the bigger time frame objective or perspective down to the lower time frame models. So here, like I said, I'm gonna now base my idea here based off. I'm gonna take my trade here on the lower time frames relative to the 2-hour order flow. So the hourly time frame, 30-minute time frame, 15-minute time frame all suggested higher prices, and they all had the same highs. So I'm able to take this model here based off of the 15-minute time frame, and there is a 5-minute fair value gap that could be used as an entry pattern, and this is a okay entry pattern. I could use this as an entry pattern. There's gonna be times where we might not be able to even have an entry pattern, even though there is a fair value gap, and that's for a completely separate video. But here, this fair value gap, just know that this fair value gap could be rebalanced. So I take my entry at this 5-minute fair value gap, and this is where the idea that there's a time stop is. We consolidate for about 14 minutes or so, right? We literally consolidated within this 5-minute fair value gap for about 14 minutes. If we had created a doji candle is basically a I don't know where prices wants to go candle. If we had created that, I would have moved my stops to break even, and I would have just if I got stopped out at break even, I'm cool. If we end up taking out the objective, I'm cool. Anything is fine. But the reason why there's a time stop here is because I want to be a part of the move where it happens, like we complete that objective right now. I don't want to be caught up in really back and forth price action. And the style that I'm trading, and because I'm taking my trades off of displacement candles tells me that we're going to complete an objective right now, and if you're not going to be a part of it, then it's going to run without you. So sometimes it's going to give you that small window of opportunity. If you don't take that small window, then bye-bye, right? So that's what I have going into this trade. But sometimes there's going to be an opportunity. Literally everything aligns itself. You have an objective. You have a high time frame objective. You have an entry pattern, but you're in the trade for 2 hours. What are you gonna do? Are you gonna wait 4 more hours? Realistically, I would have gotten myself out at the 15-minute interval. If prices gives me the sign that we're not gonna complete this objective right this instant, I'm gonna just close the trade. So after 15 minutes, if we don't create a bullish candle, I'm not gonna be a part of it. But in this case, we consolidated for 14 minutes. The very last minute, we expanded. Very, very interesting. But we actually just opened up here on the 4-hour candle too. So my morning objective, if you guys gotten a glimpse at it already, my morning objective has been completed. 4-hour candle, 8-hour candle. Let me make this black just so I can differentiate it from being the highs. So notice this is the 4-hour high, right? This green line here that I'm creating here is the 4-hour high. This is a 4-hour candle, 8-hour candle. Is the 8-hour high the same as the 4-hour high? It is. So both time frames here are now telling me that we're going to continue higher. Did we get an entry pattern? Did we get a model to target the 4-hour high? Probably not. Because I would have tried to find an expansion model. We don't even have a equilibrium or discount model for me to really be a part of it. So no entry pattern. But yeah, my morning objective is completed. Here, I would wait for more time now. I would wait for more structure. But going back to, yeah, the trade on Wednesday. Some of the takeaways here from this trade is just higher time frame objective was to rebalance a 2-hour fair value gap, and also retracing back into premium. Second, 15-minute, 30-minute, hourly time frame was the time frame that I took my model on. And notice, like I said before, notice how the 15-minute time frame, the 30-minute, and the hourly had the same highs. So that tells me that we're going to take out this objective right now. We should go right now. There's displacement on the lower time frames, like I showed you guys. 5-minute, there was a 5-minute fair value gap. Whenever there's a fair value gap, that means there's an opportunity for me to enter. If there was no fair value gap, I wouldn't have entered this. Fourth but not least, there's a time stop loss. There's 2 stop losses here: a price stop and a time stop. And this just kind of prevents me from, so this allows me to have risk management. And the second part of it is because I want to be a part of the objective right now. Like, I want prices to objective. Like, prices is telling me that we're going to complete this objective right now. If we end up not taking out the objective in that specific time window, then I'm just gonna close the trade. But yeah, that's gonna pretty much, basically, the second trade that I took that week was the same concept. I'm rebalancing this, so this is a completely different trade here. We're rebalancing a 30-minute fair value gap after trading into an hourly / 30-minute / 15-minute / whatever. But yeah, higher time frame objective for this trade was the 30-minute time frame. So like I said, this just shows you the fractality. Those concepts and ideas apply to every single time frame. I take my model based off of the 15-minute time frame. There's a 2-minute fair value gap indicating that there's strength, and the narrative of, hey, we're going to complete this objective right now. And yeah, we end up spiking into that 2-minute fair value gap and completing the 15-minute and 30-minute objective. And with that, I'm probably just going to call it a day here. No, there's not really much left to go over. I've already gone over pretty much everything that I did want to go over with you guys for this stream today. Hopefully you guys got some knowledge from it, and yeah, thank you guys.